Welcome back to Financial Table, where we break down the world of money, investing, and crypto to help you make smarter financial decisions. Today, we're diving into Bitcoin, its latest moves, market trends, and what it means for your portfolio. So, if you're looking to understand where Bitcoin is headed, you're in the right place. Bitcoin, it's a word many of us have heard, but for some it remains a concept shrouded in mystery. It often feels complex, technical, and perhaps even a little intimidating. Anyway, feel free to save these no-copyright AI images. Our goal today is to demystify Bitcoin. We're here to provide a clear, beginner-friendly explanation that cuts through the noise. We'll focus on the fundamental principles, avoiding unnecessary jargon. By the end, you'll have a solid grasp of what Bitcoin truly is. This isn't just any explanation, it's updated for 2025. The world of digital currency evolves rapidly, and we'll cover the most relevant information for today. At its core, Bitcoin is a digital currency. Think of it as money, but in a purely electronic form. Unlike physical cash or coins, Bitcoin exists only online. You can't hold it in your hand, but you can send it, receive it, and use it for transactions. One of Bitcoin's most defining characteristics is that it is decentralized. This concept is crucial to understanding its revolutionary nature. Decentralization means Bitcoin is not controlled by any single entity. There's no central bank, no government, and no corporation pulling the strings. This absence of central control means no single institution can dictate its value, freeze accounts, or block transactions. It operates independently. Instead, Bitcoin operates on a vast network of computers around the world. These computers collectively maintain and secure the system. This distributed nature makes the system incredibly resilient. It's resistant to censorship and manipulation, as no single point of failure exists. The technology underpinning Bitcoin is called the blockchain. Imagine the blockchain as a public, transparent ledger. This ledger records every single Bitcoin transaction that has ever occurred. It's like a giant, continuously growing record book. This ledger is not stored in one place. It's distributed across thousands of computers worldwide. Every participant in the network holds a copy of this ledger. When transactions happen, they are grouped together into what's called a block. Once a block is filled with transactions, it is added to the existing chain of blocks. Each new block is cryptographically linked to the previous one, forming an unbreakable chain. This cryptographic linking makes it incredibly difficult to alter past transactions. Any attempt to change a record would break the chain, immediately alerting the entire network. This system ensures the integrity and security of all Bitcoin transactions. So, how do Bitcoin transactions actually work? And how does new Bitcoin come into existence? When a user wants to send Bitcoin, they initiate a transaction using their digital wallet. This transaction is then broadcast to the entire Bitcoin network. It's like shouting out to everyone that you want to send money from one address to another. This is where miners come in. Miners are specialized computers, or often groups of computers, running powerful software. These miners compete with each other to verify and add new blocks of transactions to the blockchain. Their competition involves solving extremely complex mathematical problems. These problems are designed to be difficult to solve, but easy for the network to verify once a solution is found. The first miner to successfully solve the problem gets the right to add the next block of verified transactions to the blockchain. As a reward for their work, the successful miner receives a certain amount of newly created Bitcoin. This process of mining is the only way new Bitcoin enters circulation. It's how the supply of Bitcoin is gradually released into the system, following a predetermined schedule. Bitcoin offers several potential benefits that attract users and investors. One significant advantage is financial freedom. Anyone with an internet connection can access and use Bitcoin, regardless of their location or banking status. This opens up financial services to billions of unbanked individuals worldwide. Another key benefit is security. Due to its decentralized nature and cryptographic foundation, Bitcoin is highly resistant to hacking and censorship. Transactions are secured by complex mathematics, making them incredibly difficult to reverse or tamper with. Furthermore, some view Bitcoin as a potential hedge against inflation. Unlike traditional currencies, which can be printed in unlimited quantities by central banks, Bitcoin has a strictly limited supply. There will only ever be 21 million Bitcoins. This scarcity, combined with increasing demand, could potentially help protect its value over time, especially during periods of economic uncertainty. However, it's equally important to understand the drawbacks and challenges associated with Bitcoin. One of the most prominent is price volatility. Bitcoin's value can fluctuate significantly and rapidly, sometimes by large percentages in a single day. This high volatility makes it a risky asset for investment and can make it impractical for everyday transactions. Another consideration is the need for technical knowledge. Safely storing and managing Bitcoin requires a certain level of technical understanding. Users are responsible for their own security, and mistakes like losing private keys can result in irreversible loss of funds. There's no bank to call for help if you forget your password. Finally, a growing concern is the environmental impact of Bitcoin mining. The process of solving complex mathematical problems requires a tremendous amount of computational power, which consumes a significant amount of electricity. As Bitcoin's popularity grows, so does the energy consumption associated with its network, leading to environmental debates and calls for more sustainable mining practices. In conclusion, Bitcoin is a truly revolutionary digital currency. It represents a paradigm shift in how we think about money and financial systems. Its core foundation lies in blockchain technology, a distributed and transparent ledger that ensures security and integrity. Bitcoin presents both significant opportunities and considerable challenges. It offers financial freedom and robust security, but also comes with price volatility and environmental concerns. Understanding Bitcoin is crucial in the evolving financial landscape of 2025. This video serves as a starting point for understanding this transformative technology. We hope it has provided you with a clearer picture of what Bitcoin is and how it works. Stay tuned and subscribe for more.